Hello viewers, welcome to my channel. I'm Hasham. In this video, I'm going to explain you a very important topic of financial accounting, that is trial balance. So before making the financial statements, normally every organization will make a trial balance. After making trial balance, we go ahead in making the financial statements containing profit and loss account and balance sheet, or income statement and position statement. So trial balance is very important. A student of accounting must know the concept. In this video, I am going to explain you the meaning of trial balance. What are the objectives, why we need to make the trial balance? What are the methods of making the trial balance? And what are the points to be remembered, considered while making the trial balance? So watch the video till the end. In examination, normally a theory question will also normally be asked regarding what is trial balance, how it is made, like what are the objectives of financial statement. So this video is going to be very important. So watch the video till the end. Not only from examination point of view, but every student must know the concept. They should know only how to make the trial balance, but also they should know what is the concept, why it is prepared, what will happen if it is not prepared, like that. So I'm going to start with the meaning of the term trial balance. See here, the first stage in accounting is recording the transactions in the journal. That is the first stage of accounting. After entering all the transaction in the journal, periodically we post the transaction from journal to ledger. This process of journalizing and posting into ledger account will be continued throughout the year. At the end of the year, when we have to close the account, when we have to make the financial statements, profit and loss account, balance sheet, so before that we will make a trial balance. A trial balance is a statement in which all ledger account balances are taken. All ledger will contain all the accounts. Whatever accounts we have regarding assets, liabilities, expenses, losses, incomes, gains, all these items, accounts are there in the ledger. So we will make the balancing of each account. We will find out how much amount is the balance in every account. So some accounts may show debit balance, some accounts may show credit balance. We take all the balances. Debit balances will be put in one column, credit balances will be put in another column. So if there are no mistakes at all in recording the transaction, in posting the transaction, then definitely the total of debit and total of credit will tally, will be equal. In that case, the trial balance is tallied. We can go ahead in making the trial balance. If the total of debit and credit are not equal, that means there are some errors in posting. Then we have to locate the errors, rectify the errors, make the trial balance tally, and then only we should go to prepare the financial statements. That is the procedure. So what is the meaning? The meaning of trial balance, it's a statement which is prepared before preparing the financial statements. In this statement, we take all debit and credit balances of ledger accounts. That is the trial balance. What is the objective of trial balance? The objective of the trial balance is to check the arithmetical accuracy, whether arithmetically books of accounts are accurate or not. To check that, we make the trial balance. Now the question arises, is trial balance is compulsory to be made? No, it is not compulsory. Without making trial balance also we can go and prepare the financial statements, but it will be very difficult. So if you open all the ledger accounts, and from ledger accounts directly if we go to make the financial statements, it will be prepared in 6 hours. It will take approximately, example I am giving, 6 hours are required to make the financial statements directly from the ledger accounts. But we don't have so much of time. We want a shortcut method so that easily we can make the financial statements. The shortcut method is make a trial balance. Open the ledger, take all the ledger account balances, take it on a paper, debit and credit balances. From this trial balance, easily we can make the financial statements. So the preparation of financial statement will become easier if we make the trial balance. So normally every organization will make the trial balance. Right? Now, why all these debit balances and credit balance will be equal? That is the question. the fundamental principle of double entry bookkeeping system. Double entry bookkeeping system is, for every debit there is a corresponding credit. For every debit there is a corresponding credit. So whenever we debit one account, simultaneously we will credit another account. We have seen in the last video regarding journal entries. When we pay salaries account debtor to cash account. When we pay rent account debtor to cash account. When we sell the goods, cash account debtor to sales. When we purchase the goods, purchases account debtor to cash. Every transaction we are debiting one account, crediting another account with the same amount. That is the fundamental principle of double entry system of bookkeeping. So when we follow double entry system of bookkeeping, all the debits must be equal to all the credits. Because every time we are debiting one account, crediting another account with the same amount. That's why all debits and all credits must be equal. So your trial balance will agree. Suppose if you commit a mistake while posting the transaction in two accounts. In one account we have taken 5,000, the other account by mistake we have taken 500. This is an error. This error will be located by preparing a trial balance. If your trial balance does not agree, that means there are some mistakes in the accounts. Go and find out where is that mistake, rectify the mistake, and again make the correct trial balance and go ahead in preparing the financial statements. So why the trial balance will agree? Because we follow double entry system of bookkeeping. In double entry system, every debit will have a corresponding credit. All the debits, all the credit must be equal. So here I have explained you fundamental principle. Therefore, the total debit and total credit must agree. So if the trial balance, if both the debit and credit columns are equal, it means arithmetically the books of accounts are correct. But that is not the conclusive proof. One more point. We should not think that whenever trial balance is agreeing, that means there are no mistakes at all in the books. No, not at all. There may be some errors which cannot be detected in trial balance, in recording the entries or in posting the entries. Simple example I'll give you. Suppose while making an original entry in the journal, there's a mistake. Example, goods are purchased for 2,000. Goods are purchased for 2,000. While passing the original entry, by mistake we have taken 200. Purchases account data to 200 we have taken in the original entry. Later on this entry is posted into the ledger account. Same 200. That means your trial balance is agreeing. But there is a mistake. Instead of 2,000 you have taken 200 while recording the original entry. This mistake will not be detected in the trial balance. It's a mistake but not detected. Similarly, error of principle. Example, an asset is purchased, furniture is purchased, the correct entry furniture account data to cash. By mistake, purchases account to cash we have written. The accountant has made a mistake. Instead of debiting furniture account, he has debited purchases account. Trial balance will tally. But there is a mistake. Furniture account should have been debited. It is not debited. Purchase account by mistake it is debited. Your trial balance will agree. So this is an example where in spite of the mistakes in the books of accounts, our trial balance still agree. So what I want to say, it is not the conclusive proof that there are no errors. There may be errors. There may be some error. Compensating error. One error will compensate another error. Two errors are there. One error is on debit side, another error is on credit side. Both the errors will make a set off and your trial balance will agree. That means two errors are there, one debit error, one credit error. By setting off those errors, your trial balance will agree. But still there are some errors. So it is not a conclusive proof. In spite that trial balance is agreeing, it is possible that there may be some errors in the books of accounts. So, but the importance of trial balance is more. Without making trial balance, it will be very, very difficult. So to check the arithmetical accuracy, it is better to make the trial balance. So here I have explained. So the main function of trial balance is that it acts as a device to check. The main purpose of making the trial balance is a device to check whether the books are arithmetically correct or not. Then it acts as a starting point for the preparation of financial statements. Normally, before making the profit and loss account balance sheet or before making the income statement and balance sheet, it is better to make a trial balance. With the help of trial balance, we go ahead in making the financial statement. It facilitates the preparation of profit and loss account and balance sheet. It should be noted that the agreement of trial balance does not necessarily prove the accuracy of all entries and posting. There may be some errors which are not disclosed by trial balance. Just now I have given some examples where in spite of those errors also our trial balance is agreeing. Few errors. Some errors may be there, but the apparent errors will be detected by the trial balance. That's all. So this is the meaning, concept of the term trial balance. Now what are the methods? There are two methods of making the trial balance. The first method is total method and the second method is balance method. Two methods are there for making trial balance. First we'll discuss about the total method. In this method we take the total of debit and credit of each account. Every account we will take the total of debit, total of credit. For example, if we open the ledger account of salaries account, all debit items we can add up. Only debit balance we have. Credit side we don't have any item on the salary account. Rent account, all debit items. Purchase account, all debit items. Sales account, all credit items will take. But some accounts will have debit and credit. Example, we are having dealings with Mr. X. Mr. X is a person with whom the business is having some dealings. Selling the goods, receiving the cash. So sometimes we are selling the goods to Mr. X. Sometimes Mr. X is paying the cash. Like that, there are some dealings between the business and Mr. X. So we have opened the account of Mr. X. He is having transaction on debit side and also on the credit side. What we take? Take the total of all debit column and take the total of the credit column. So we are not balancing, we are not setting off, but simply taking the debit total and credit total. In this way, we take the totals of debits and total of credits of all accounts in the ledger without balancing. That method is called total method. The second method is balance method. But the total method, the drawback of total method is we cannot be able to make the financial statements. We can check the arithmetical accuracy, but by using total method, it will not be helpful in making the financial statements. Then which method is helpful? Balance method. Balance method will be good method, because by using balance method, if we make a trial balance, that trial balance will be very much useful in making the financial statements. So what is this balance method? In this method, the difference between debit and credit of each account is calculated. Some accounts may show debit balance, whereas some accounts will show credit balance. So in this balance method, we find out what is the difference between the debit and the credit. Example, we are having a business. We are having dealing with Mr. X, a person. Sometimes we are selling the goods, sometimes he is paying the cash. So debit side, when we see the debit side of X account, if we open the ledger account, X account, debit side we will find 10 lakh rupees. Credit side, if we take the total, it is 8 lakh rupees. So 10 lakh rupees debit side, 8 lakh rupees credit side. So we are having a balance of 2 lakh. We are having a balance of 2 lakh. 10 lakh minus 8 lakh. 2 lakh rupees is the balancing figure. So that balance we calculate. In this way, we calculate the balances of all the ledger accounts. Debit minus credit or credit minus debit. Whatever difference we get, we want the difference, either debit minus credit or credit minus debit. We'll take all the differences. So some account will show a balance of debit balance and some accounts will show credit balance. Now we make a trial balance taking only the balance of every account. Some accounts are there where total debit and credit both are equal. Ignore, don't take into account because there is no balance. Debit total and credit total are equal. In that case, the account is closed. That account will not come in the trial balance. This is called balance method. So normally, we follow balance method of making the trial balance. We won't follow total method. Balance method is superior method because by using this balance method, we can easily make the financial statements. Now, points to be remembered for preparing trial balance. Now, next video I'm going to make on problems on trial balance. So, what are the points you have to remember? Concentrate here. Accounts of assets, expenses and losses shows debit balance. 1 point. First point. The accounts of assets. Assets like land and building, plant and machinery, furniture and fixtures, equipment, stock. All these are assets. Assets will show debit balance. All expenses. Expenses like salaries, rent, printing, postage, telephone. All these are expenses. It will show debit balance. Losses. The losses like bad debts, depreciation, loss by fire. All these are the losses. It will show debit balance. The first point, all assets, expenses, losses will show debit balance. Now in the next video, I am going to solve the problem on trial balance. In that case, you have to remember this point. If it is an asset, take it in the debit column. If it is an expense, take it in the debit column. If it is a loss, take it in the debit column. Second, accounts of liabilities, incomes and gains shows credit balance. Opposite. If an item is a liability, example, loan taken from bank, a loan taken, outstanding expenses like outstanding salary, outstanding rent, creditors. Creditors are the person from whom we purchase the goods and we have to make the payment. Suppliers. Normally from suppliers we purchase the goods, we have not made the payment. They are called creditors. It's a liability. So all the liabilities will show credit balance. Loan taken, creditors, bills payable, outstanding expenses, these will show credit balance. Secondly, incomes. Any income like dividend received, interest received, rent received, commission received, these are all incomes, credit balance. Gains, incomes and gains means one and the same. All will show credit balance. The first point, all assets, expenses, losses, debit balance. All incomes, gains, all liabilities, incomes, gains, credit balance. Now, sundry debtors, debit balance. Sundry debtors means the total of all debtors. Debtors means the parties from whom we have to receive the money. The customers from whom we have to get the money are called debtors. When we add up all the debtors, it is called sundry debtors. For example, for our business, we have 10 customers. From each customer, some amount is due to us. They have to pay us. We add up all the amounts which are due from different customers. It is called sundry debtor. So sundry debtor will show debit balance. Sundry creditors, opposite. All the suppliers to whom we have to pay the amount. We have purchased the goods from different suppliers. If we add up all the amounts of the supplier, it is called sundry creditors. It's a credit balance. It shows a credit balance. Opening stock, debit balance. Generally, closing stock will not appear in trial balance. Opening stock. If in the problem, opening stock is given, take it in the debit column. Closing stock, normally it will not be given. Some exceptions are there where closing stock may be given in the trial balance. But normally, closing stock will not be taken. It will be taken in the adjustments. Next, reserves and provisions will show credit balance. Reserve for doubtful debts, provision for doubtful debts, provision for taxation. Like that, reserves and provisions will show credit balance. Next, these are the points you have to remember. Now, in a statement form, I will explain you what are the items that will show debit balance and what are the items that will show credit balance. The table showing accounts appearing on debit and credit side are as follows. Debit. Which are the accounts which show debit balance? Sundry debtors, bank balance, loans or advances given, drawings, prepaid expenses, purchases, opening stock, return inward. Return inward means sales return. Remember these words. Return inward means sales return. So sales return will be debited. Then land and building, plant and machinery, furniture, investment. All these are assets. Goodwill. Then all expenses and losses like salaries, rent, printing, stationery, etc. By listening this lecture, you can be able to remember that these are the items that will be taken on debit column. Now what are the items that will show credit column? That should be taken in the credit column. Sundry creditors. Sundry debtors, debit column. Sundry creditors, credit column. Bank overdraft. Only bank balance is given, debit balance. Bank overdraft. Overdraft is a temporary loan. It's a temporary loan taken from bank. It is called overdraft. It's a liability. It will show credit balance. Then loan taken. If a loan is taken from any person or from bank, it is a credit balance. Capital, always credit. Capital shows a credit balance, whereas drawings will show debit balance. Capital means the money invested by the owner. Drawings means the person who withdraws the money from business for personal use. So drawings, debit. Capital, credit. Outstanding expenses. The amount due are called outstanding expenses. Example, salary outstanding, rent outstanding, telephone bill outstanding. It's a liability. Sales. Sales will show credit balance. Purchases will show debit balance. Purchases will show debit balance. Return outward means purchase return. Return outward means purchase return. Purchase return will show credit balance. Remember this point. Sales return will show debit balance. Purchase return will show credit balance. Then provision for doubtful debts, provision for discount on debtors, general reserves, all incomes and gains such as interest received, rent received, commission received, etc. All types of incomes will show credit balance. So by watching this video, you can be able to understand that which are the items that will be taken on debit column and which are the items that will be taken in credit column. And one point you remember, sales will show credit balance. Sales will show credit balance, but sales return will show debit balance. Similarly, purchases will show debit balance. Purchase return will show credit balance. So these are the points you have to remember. So viewers, in this video I have explained you in detail the meaning of the term trial balance. What is the meaning? What are the objectives? Why it is prepared? Then what are the methods of making the trial balance? And what are the points to be considered while making the trial balance? It's a small short video, and then only some 5 to 7 problems will solve on this making the trial balance. So if you are satisfied with my lecture, give a like to the video. Share my channel in your group, in your friend circle, so that more students can watch the video and enhance the knowledge, get the power, confidence in you. And give your comments on these videos. And lastly, don't forget to subscribe to my channel. I'm getting a lot of views, but subscribers are not proportionately increasing with my views. The reason, many of my viewers are watching the video but simply not subscribing. Please subscribe. That gives me more encouragement to provide you much more better and better videos. So I will start the problems on trial balance in the next video.